Good morning, trading world. It is May 25th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. I'm running way behind. It's already 9 a.m. on the East Coast, so I want to rush through it pretty quick. May not get a chance to do all the scenarios, but here we go. The title of this morning's outlook is Nvidia lands on the moon, but is it enough to rally the rest of big tech and hold the market up? Now, picking up from yesterday's pre-market, I said Nvidia would be a major player the rest of the week, pending a bounce from the 300 level or the 290 area, depending on how much it fell before earnings. We got a moonshot from the 299 area. Now will we get participation from the rest of big tech to hold us up? Can Apple, Microsoft, Amazon, and Google join in to keep it going? It's going to take a lot to get the SPY back through the 415, 416 area, so all of big tech will need to participate. Also, there was a little confusion about what I meant in getting your short squeeze candidates ready. When I said short squeeze candidates, I meant stocks that were carrying a high short interest, but on the verge of breaking to the upside and making traders abandon short positions, adding fuel to the upside run. Pretty much what we just saw in Nvidia. Let me see if I can get the key levels up quickly. All right, here we are with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 414 area. Queen resistance, which is going to be key today, this 415 to 416 area. And then our king resistance, 417 to the 420 area. I do expect a lot of rejection off of this 415, 416 area. And then we have our support side, our jack support at 413 area. Queen support at the 412 area, which we could likely come back and test again. If not, some point today, definitely see some overnight activity headed back to the 411, 409 area, which is our king support. The main thesis for today is bearish, closing below the 411.09 with a projected target low of between the 411 and 409. The alternate thesis is bullish, and I should say alternate, more explosive thesis is bullish, closing above the 411.09 with a projected target high of between 412 and 418. The main channel we are in is 416 all the way down to 397. Yesterday, market strengthened breadth, open gap up, and immediately tumbled downhill from there until 10 a.m. where it pushed up but consolidated the rest of the day. I expect strength to open strong and start to consolidate with possible divergence in price that may not play out until overnight. We do have harmony between the technical side, which is bearish, and the quant side, which is also bearish on the SPY. But if a gap happens, look to ignore the market. Look to ignore this because the market will be irrational until the gap in order flow is filled, which means we may have that alternate, more explosive thesis with a bearish close. A bullish close. The futures have a bearish bias as well, with harmony between the technical side, which is bearish, and the quant side, which is bearish. But again, with order flow, with a gap in order flow, the market will be irrational. This brings us to our scenarios on the day. I apologize, I'm not going to have time to draw up the actual scenarios on the day, but I'll go through it real quick. The first is going to be our rounded reversal day type structure, meaning we could get a continued push higher toward the Jack of Queen resistance and find midday chop around either the Queen or King resistance before going back down with the same energy of force that we went up with the first part of the day. The next scenario is going to be our trend day up, meaning we open, gap up, start with a pushback toward the previous close, find support on or before that previous close, then begin the uptrend for the day. We usually find our midday chop around either the possible Queen or King resistance area. The key for the day on the trend day is going to be to watch for the risk of reaching a target and failing from that target. And that can give us a wild push down. The last scenario is going to be the expanded range day structure. We could get a pop-up pre-market, continue into the morning, and then we find rejection from resistance. Experience some consolidation as we try to get it together for another push-up, but end up making another half-hearted push back down that continues overnight. Those are the scenarios. I hope this helps. Sorry I didn't get a chance to put the images up. But as I always say, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position and the risk in the current market conditions. We manage that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.